Right now, gold is trading at approximately $4,700 per ounce. It hit an all-time high of $5,595 on January 29, 2026. Every central bank on Earth holds it. Every civilization in history valued it. 5,000 years of trust built into a single metal. What if tomorrow, all of that disappeared? What if gold became completely worthless overnight? The consequences would reach into places most people would never expect. Before we go into what happens, let's understand exactly how much gold actually matters to the world right now. According to the World Gold Council, the total above-ground stock of gold at the end of 2024 was 216,265 tons. Based on a gold price of approximately $4,166 per troy ounce, Visual Capitalist calculated the total value of all the world's mined gold at approximately $29 trillion. That is $29 trillion that would become worthless overnight. Now here is who holds the most of it. According to the World Gold Council, global central banks hold approximately 36,520 tons of gold, roughly 17% of all gold ever mined. The United States holds the most, 8,133 tons, making it the largest official gold reserve in the world. The majority stored at Fort Knox, Kentucky, 147.3 million troy ounces, verified by the U.S. Treasury and U.S. Mint official records. These are the numbers. Now, what happens when they go to zero? Chapter 1. Every central bank on Earth loses its foundation. Gold has been held by governments for one specific reason. It is an asset that no government can print, manipulate, or destroy. If gold became worthless overnight, the United States Treasury's gold reserves would instantly go from their current market value of over $1 trillion to zero. Every other central bank on Earth faces the same situation simultaneously. Germany, 3,351 tons, gone. China, over 2,200 tons, gone. Russia, 2,332 tons, gone. India, over 800 tons, gone. These are verified figures from the World Gold Council and Investing News Network as of late 2025. Now, does this collapse the global economy? Not immediately. And here is why. The world left the gold standard in 1971, meaning no currency is mathematically backed by gold anymore. But gold still plays a critical role in every major economy. Countries hold gold as their last resort emergency asset, as collateral for international borrowing, as a tool to defend their currency when it comes under attack. If gold became worthless overnight, currencies would not collapse immediately, but the safety net underneath them would disappear completely. For strong economies, painful but survivable. For weaker economies already under pressure, potentially catastrophic. The difference between currencies are backed by gold and economies depend on gold as a safety net is important. Both lead to serious consequences, just at different speeds. Financial markets experience one of the largest single-day shocks in history. Gold ETFs, exchange-traded funds backed by physical gold, go to zero immediately. According to the World Gold Council, in Q3 2025 alone, inflows into gold-backed ETFs hit $26 billion. All of that wiped out. Every gold mining company on every stock exchange on Earth goes to zero. Their entire business model no longer exists. The jewelry industry, which according to the World Gold Council accounts for approximately 50% of global gold demand, collapses overnight. Every gold jewelry retailer, their entire inventory, worthless. Gold futures contracts, which are traded on exchanges around the world, trigger catastrophic losses for every institution holding them. The panic spreads. When one major asset class goes to zero without warning, investors panic and start selling everything. Stocks drop, bonds drop. The search for safety creates chaos in every market simultaneously. Silver, historically gold's closest alternative safe haven, would surge dramatically as money desperately searches for a replacement store of value. Platinum and palladium would follow the same pattern. Chapter 3. And this is the part most people miss. Gold is not just jewelry and investment. Gold is inside your phone, your computer, your car, medical devices, satellites. According to the World Gold Council, the technology sector used approximately 7% of total global gold demand in 2024. That is 326 tons of gold, used in electronics and computing alone in a single year. Gold is used in semiconductors, the chips that power everything from your smartphone to artificial intelligence systems. High-quality semiconductors feature thin wires and films made of gold because gold does not corrode, making connections reliable for decades. Gold is used in medical devices because it is biocompatible, meaning the human body does not reject it. It is used in dental crowns, cancer treatment equipment, and precision medical instruments. If gold became worthless, none of this industry collapses. These industries would continue. They would simply acquire gold at zero cost, which would actually make manufacturing cheaper. This is the twist most people miss. For technology and medicine, gold becoming worthless is actually good news. The material they need suddenly costs nothing. The industries that collapse are the ones that treated gold as valuable in itself, not the ones that used it for what it actually does. Chapter 4, who actually wins and who actually loses. The losers are clear. Every individual who holds physical gold bars or coins, their savings are gone. Every central bank, their gold reserves are gone. Though as we established, currencies themselves survive because they are no longer backed by gold. Every gold mining country, South Africa, Australia, Russia, Canada, their most profitable industry collapses overnight. Every gold jewelry market, India and China together account for the majority of global jewelry demand. Those economies take a severe hit. But the winners? Technology companies benefit. Their manufacturing costs drop. Chemtrees with very little gold but strong technology sectors are relatively unaffected. And here is the most important economic fact. According to JP Morgan Global Research, gold's share of total global financial assets has risen to about 2.8% as of Q3 2025. That means 97.2% of global financial assets are not gold. Stocks, bonds, real estate, business equity, cash, all of these continue. The world economy does not end. It absorbs the shock, painful but survivable. The real lesson is this. Gold's value was never really about what it does. It was about what people believed it was worth. The moment that belief changes, so does everything else. But here is the final thought that makes this scenario truly interesting. Gold becoming worthless is almost impossible, and here is the economic reason why. Gold does not become worthless unless everyone simultaneously stops believing in it. But every time the world gets uncertain, wars, inflation, bank collapses, people run to gold, not away from it. In 2025 alone, gold's price rose 65% in a single year. According to Yahoo Finance, between May 2025 and May 2026, gold rose another 41%. The more uncertain the world becomes, the more gold is worth. That is not coincidence. That is 5,000 years of human psychology built into a single asset. Gold does not have intrinsic value because it is useful. It has value because every civilization independently, without talking to each other, decided it did. And that is almost impossible to undo. If you want more videos where we apply real verified data to scenarios that make you think, subscribe. New video every week. Drop a comment. What do you think would actually replace gold if it became worthless?